Welcome to TradeTheMBI.com. This is John. This report is for the 17th. A little bit of fade back after making new highs coming through. Nothing special. We're still looking at extremes well above 33. And 1.1 on the short side. Not going to see a whole lot of negativity from that. Shakeout continuing to rise. Bulls again have the situation under their control. It's literally up to them to keep driving price higher at this particular stage. I think that with the option situation, you're going to see back and forth coming through, and after this big run up, you're get as much as a 30 to 50% retrace into that move anyway, and that would still be normal within normal trading practices. At this particular stage, though, market's got to digest between this idea of easy money versus whether or not severe economic drag from the rise in interest rates finally starting to take grip. From a treasury standpoint, we've already talked, there's no alternative for anyone. You either got to be in the market or commodities, plain and simple. And we saw that already starting to take effect. Copper, cocoa, even chocolate, things like that. This is where money's going to move, and it's going to drive those things into excess states simply because there's no alternative. That's where you hedge against your inflationary bets, and you're probably going to ease off on consumer and things like that because you know that they're being squeezed quite a bit. And this gets back into that secondary item we were talking about when it comes to installment debt that isn't being recorded, this buy now, pay later, or in installment loans. And those numbers are becoming quite difficult to track and rather large. And it's a concern because nobody really knows now how much debt really exists in the public arena. And potentially has broader implications because a tapped out consumer is just that. And we can already see it with where credit card levels are. Even that may change because you could just be moving your debt to installment payments that aren't reported anywhere. So from an oil standpoint, slight increase, and again, still elevated for any containment of inflation. So, this is the thing. You get the spike up of inflation, and then the next month it comes off a little bit softer relative to what? You're still not seeing any reduction in prices and only an increase. And I mean, overall, there's been 19% increase relative inflation since Biden took it, and that's the official numbers. And we all know that food prices and everything else are much higher than that. So that's really what cripples people in general. From a euro standpoint, again, they're excited by the concept of softening U.S. interest policy, which and the eurozone is some. They call it positivity for economic growth in the eurozone, but they're hovering right around zero, as if that's some miraculous thing. It's interesting stuff. Gold standpoint, again, we talked about it's going to continue to rise. So will cryptocurrencies, and we saw a huge jump in Bitcoin that the other day, and it's not going to stop. Because again, you're stuck in this situation of, are you going to keep chasing asset prices higher? Yes, they have to go higher because of the devaluation. So there's that. Even, earnings haven't been horrible, but certainly not stupendous from any stretch. ETH, again, has its issues with regulatory concerns, but again, still going to be attractive in the broader sense. When we looked at it from our 50K standpoint, everything was going great. We had the slight dip below the 33. Still wasn't enough short interest, but then later in the day, we finally got that crossover of that white above red with magenta below, and that was the signal to move to the short side of things. And what we did was we filled in some positive extremes, going all the way back to, the beginning of that early move. But there's still a few more that could be filled as low as the 5,300 range. So pretty much straightforward for the readings. From an intraday standpoint, again, we talked about how they're going to be having to move these things back and forth just from an option standpoint, because that's where a lot of action is taking place. And you get the run up, filled it all back in, continue to show some weakness, try and entice shorts into the setup. not working so well because we can see that there's just a whole lot of short activity, and that's problematic because bulls need that to drive things higher. So again, I think it's just a matter of simply following our readings as they're coming through. Pretty straightforward from what we saw even from the 50K and even looking intraday. But from the broader aspect of things, the bias is still broadly to the upside, but there's definitely going to be some swings going back and forth, and that volatility is going to only get larger because the exposure is that much greater. So people who see the VIX and then going to these record lows, not going to stay that way for long. So there you have it. Long and the short of it. Anything relevant, I'll put it on the Skype chat for you. Have a good one. Trade well.